Why did I even want to record this video is because I underestimated the effects of valuation gains for my REIT. So in the past, if you have watched my previous videos, there was one video that says that I don't use valuation gains to measure the performance of my REIT manager. What exactly happened, what changed my mind was when I attended the AGM of Suntec REIT. The management said a few things, and I decided that, hey, why not, let's do some homework and delve into the details. Latest results from Suntec first quarter, average borrowing rate was around 42.4. During the AGM, the management said that even though there are no penalties for REIT to reach the regulatory borrowing limit, but it means that they are unable to borrow more to expand or increase the revenue of the REIT. And that really mattered to me because that was my past belief. And since the management said that, I decided that, hey, why not? Let's link up everything. So what will happen in the next segment is that you'll be seeing so-called like an Excel file where I'll be linking up everything, showing like what happens if one item in the profit and loss statement, how does it impact? So that's my intent of that next segment. So continue watching. Down here, you will see that in where you see column B, C, D, E, F, G, H, I, J. I think there's some things even at K. But let's focus from B to E because that is where I would be doing all the linkages. You see that in row 7, there are this profit and loss, the unit holder funds, there's the balance sheet, and there's the portfolio statement. These are the various statements that can be found inside the annual report. Then from row 13 to row 16, you can see the various items because before I recorded this video, I went to do some homework, understood the linkages, so that's how I'm able to share with you. In the first part, I talk about valuation gains, so definitely that is found in the profit and loss. So let's move this up such that you can start to see the linkages. And the reason I color coded the revaluation gains because it's an item that we can find in the profit and loss. So with those colors, you can see that how does those colors from one statement is linked to another statement. So as part of the profit and loss, there will also be this thing called the net profit as the last line, because that is where the REIT manager will say how much profit is attributable to the unit holders. Where does the net profit go next? It definitely goes into this statement called the unit holders fund, right? Goes to the unit holders fund. And what's the significance? Because from column C, D, and E, right, this is where the balance sheets will all come in. So that's why I also wanted to bring this up. So now if I move these components upwards, you see that from net profit, it impacts the unit holders equity. And if we go to the next statement, which is actually the portfolio statement, I have discovered that the unit holders equity, right? Because I think accounting 101 or investing 101, asset equal to equity plus liability. So since the buildings are an asset in the REIT, the unit holders equity is also found in this portfolio statement. So thus you see that at row 11, right? Row 11 here, you see a unit holders equity in column C and unit holders equity in column E under the portfolio statement. Because this portfolio statement also includes these two other items. Because this video is about Suntec REIT, Suntec has joint ventures, so that's why you see at row 10, right? Row 10, there is this interest in JV in their portfolio statement. Please go and review your own REIT because things may differ. So in the context of Suntec REIT, yes, they have a interest in joint venture and their own properties. Since the unit holders equity is linked to this investment properties and the interest in joint venture, how is it then linked to the borrowings? Is found under the balance sheet. Okay, so now I copy this too, and because in the balance sheet the borrowings is part of the liabilities, so I just paste it here. And in the midst of borrowing money, there's also this borrowing cost, which is sometimes termed as finance cost. So that's how the whole linkage is being done. You can see that we started off with revaluation gains, we went to net profit. From net profit, we discovered it's linked to the unitholders' equity. Then the unitholders' equity is linked to the carrying value of the individual assets, and somehow this carrying value of the individual assets also impacts the number of borrowings, which then subsequently determine the amount of borrowing costs that a REIT will have to incur. What I also need to bring your attention to next is actually at row 5, where we're figuring out, okay, how will this translate to the regulatory borrowing limits set on REITs? It's because for Suntec, their average leverage ratio is based on the amount of borrowings versus the assets that they have, in particular the investment properties and the interest in joint venture. So you can see that how can Suntec REIT reach limit even faster? Either the numerator, which is the amount of borrowings increase, or the denominator, which is the valuation of the individual property, starts to shrink. So at this part, what exactly to Suntec REIT? It's kind of peculiar because the management mentioned that the valuation for Singapore properties are all going up, but the valuation for overseas properties are all going down. That was how with this linkage, now I start to understand the significance of valuation gains even better. At least now I know that next time if I look at Capital DC REIT, which I haven't really looked at yet, with this newfound knowledge, I'll be a bit more mindful, and even better, ask even wiser questions when I at the AGM. This is one of the biggest takeaway. If you are keen to know more, you might want to know why I would want to sell away Southgate